webinar. So in this webinar, we talk about markets, the performance of the passing week, what we are anticipating, for the key indices, both Nifty and the banking index for the next week. Some of the stocks which should be on your radar, followed by a quick feedback poll on how you like the session or not, and what all factors that you would like to hear from us. And we end the session with the Q&A, anything related to any particular sector that you would like to know, which we have missed during the presentation, or which we did, discuss, but we want more clarity and, more detailed observations. Something can be discussed. Stock-specific queries we generally avoid because so that we can end the session on time. So in the next half an hour, we'll try to, capture as much as we can about, how we are anticipating the market next week and what should be our trading strategy. All right. So before we start, this standard disclaimer that we have, it's not a trading or investment recommendation which we're going to share. So please, don't just jump to the conclusion that it's a trading or investment recommendation. Take help from your financial advisor if you're planning any trade based on the information shared. All right, so fourth successive session of fourth successive week of index ending in green. Though it's not a very decisive close though, but still, as long as we are maintaining this positive stance, it is okay. A new record high for both Nifty and Sensex, 22,500, 74,200 is roughly, 119 for Sensex is something that we've ended. So on and all, it's a good close. Means we are maintaining, buy on dips approach. We are consistently maintaining that bias, and though in between the kind of momentum that we were anticipating, that's missing. But good part is banking is doing well. Now coming to the sectoral performance, banking has improved significantly. The kind of underperformance that we were seeing it earlier, that has negated to some extent. Not completely, but yes, to some extent, definitely. Other than that, energy, pharma, auto, financial services, they were the top contributors during the week. Losers, media, consistent loser, just because we have Z in media index and drifting lower with every passing week. You generally see media being on the losing side. And IT, realty, and FMCG, they have also witnessed a decline. IT, surprisingly, when the US market tech-heavy index, Nasdaq Composite, in fact, in the last week, it made a new record highs. Despite that, the position in the IT space was lackluster in this week in our markets. So let's see how the situation is going to pan out, because we are again seeing some profit taking in the US market. So we need to see whether they manage to, resume the trend or not, and that might reflect in our market. By the way, IT has improved in the last two trading sessions because IT majors, they have recovered significantly. Still, we have ended on a negative note. Now talking about gainers, losers, two names from the auto basket, Bajaj Auto, Tata Motors, some of the top gainers. Then we have Bharti Airtel, SDFC Life, and Tata Consumer. They've also ended with strong gains. At the same time, across sectors, but two names from the IT space, LTIM and Infosys, among the top losers. Then we have Ultratech, M&M and Dani. So again, it's an interesting, the trend that we were seeing that last week also we talked about, that within the sector we are getting the top gainers and losers within the Nifty 50 basket. So, Tata Motors on the long side, M&M on the short side, or Bajaj Auto on the long side and M&M on the short side. So this is something that we are seeing, that within the sector we are seeing not all stocks are, maintaining the same direction. And now especially we are seeing this trend being more visible Means earlier we had that majority of stock from a particular sectors, they were trading in sync, they were either inching higher, uh, but not lower in case if they're consolidating. Means the trend was largely in sync. But now that has turned, slightly different. That within the sector you are getting the top losers and top gainers. Now let's talk about market for the next week. So this is the daily graph of Nifty 50 index. So I've added few more lines to what we've shared the last time. Largely since we have not seen any major change when it comes to the index, 0.5% gains. So this is something that is basically telling the story that 3 days of very nominal or lackluster move followed by a strong session yesterday and again a muted session. So out of five, four sessions were muted, very narrow range, very lackluster, indecisive. But good part is that we were holding above the support zone. We not even tried once to come closer to the 20 EMA. So as long as we are holding this 20 EMA, the trend, the tone is likely to remain positive. 22,150 is what the area is. Earlier, it was at 21,900, the lower range of the support. So first now the support has shifted to 22,150, and then in case if it breaches, then 21,900. Upside, this first trend line hurdle. So as you can see, it's a channel now in the Nifty, right? The lower band has been tested thrice, means twice, one, two, and upper band. It didn't make content to test here, but now we are anticipating that the way we are inching higher gradually, this could be the first area of resistance, that is 22,800, which we have discussed last time. And in case if we manage to surpass this hurdle, then this upper trend line, which goes beyond 23,000, 23,100 area, that will be the next major resistance. So I hope it is very clear that 22,150, as long as we are holding 20 EMA, it's a good market. It's a buyer dip market for the index at least. So we are not seeing any major challenge on that front, despite the momentum is not in the picture, but the tone is positive. Now let's talk about the other important index, banking. So for banking, I have taken the weekly graph, not daily, to show this channel basically that we have been trading in. And this is the record high zone. So last time, if you remember, that we discussed about the banking has to play important role, for further up move. We always say that, but especially after this recent, challenging phase that we had in the other sectors, means IT was trading sideways, FMCG was witnessing decline, energy majors they are now also witnessing a bit of a breather. So amid all this, banking was the silver lining, and yes, it turned out well. It inched higher. Now this previous record high zone, which is around this 48, 400, 500 mark, will be the first area of resistance. And once we cross this, then the upper band of this trend line, the upper band of this channel, which is around 49,600, that is going to be the next major hurdle for the banking index. Downside, this zone, which is on the daily chart, is around 47,200, 20 EMA, and then 46,800. So this and this, it's more visible on the daily chart. On weekly chart, is basically something we have support closer to 46,500. But I feel that the way we have seeing a catch-up move in the private banking majors, the downside seems capped in the banking index in the coming weeks. So we still have decent upside potential when it comes to the banking. So What has improved for the banking? These stocks which were underperforming, stocks like Kotak, HDFC, they have started participating. It's not that they are outrightly doing exceptional things. Excess ICICI above preferred counters. If you'll go back and see our 10 recordings of these webinars, weekly webinars, you will hear just two common names every time when it comes to banking: Axis and ICICI. So they are the one which basically are leading from the front. Then we are seeing catch-up movie in the others. Among the PSU pack also, the same preference: SBI, Canara Bank, Bank of Baroda. They were the one which continue to inch higher. Rest of the stocks mixed basically. It's not that they are outrightly not participating, but yes, it's not a very encouraging performance from the others. So this is about the indices. Now let's talk about stocks where we are seeing potential. So this is the first name from the list, Chambal Fertilizer. So Chambal Fertilizer, if we dissect this chart in three intervals: first a phase of decline, then consolidation or range bound move above the long term averages, followed by a breakout, and then again a pause above the short term averages and a fresh base formation. So we feel this basing is complete, and this weekly candle indicates possibility of resumption of the uptrend, and the stock might retest the previous swing high and may in fact surpass also this time. So this is one stock that can be on your radar for the next week for the long trades. Next, ICICI Pru. Again, we have had the phase of underperformance from the life insurance counter, but now we are seeing change in the trend. So SBI Life, it's leading from the front. Then we have ICICI Pru, then SDFC Life. That is how one should look at the names for the preference also. SBI Life is anyways trading at the record highs. We feel that ICICI Pru, this first reversal, post this, and then a higher basing and another, breakout. Or it can be seen like this also, a cup and handle pattern which acts as a continuation. So though as per the in the pattern, it usually ends after the breakout from the previous high, but we feel that the kind of volumes and price action, it clearly shows that the stock has potential to inch further higher from the current levels and inch toward 620, 640 levels in weeks to come. This is another stock that we like and may do well in the coming week. But as another important aspect is that despite all this positive trend that we are seeing in the index for last 4 weeks, consistent up move, the broader indices are still seeing underperformance. In fact, it's a sign of distribution. It's too early to say that the broader indices have topped out. But yes, there are clear signs of distribution in mid cap and small cap index. So after almost 1 month of underperformance, we feel that in case if there'll be any pause or consolidation and profit taking in the market, the mid cap and small cap might get strong beating in case if that happens. So do maintain few stocks in your shorting list also. Means from the FNO universe, majority of stocks are still above their major averages. So it's difficult to find the best shorting candidates. But a couple of names like Delta Corp and SBI Cards, wherein we are seeing consistent decline. And then we have other names also from the FMCG basket, though we are seeing a bit of a rebound in HUL, ITC. But these are some of these weak names alongside with UPL, wherein we are seeing consistent downtrend. But for a time being now, let's focus on Delta Corp. So post this channel breakdown, it was hovering in a range, and it seems like that it's the next phase of distribution that was going on, and it's almost done now. This pattern, price pattern shows, and it might resume decline and maybe a newer low, which could result in 110, maybe lower 100 levels in the coming weeks. So this is one stock. At least if you're not going short, you should not have in your buy side portfolio, because it clearly shows the kind of price action that we are seeing post breakdown. Uh, Majority of time it turns out to be a distribution, not accumulation. So just to sum it up, our view, uh, tone positive for both Nifty and the banking index. Momentum is missing, but it is okay as long as we are not, uh, breaching the 20 EMA on the daily chart. But yes, the intermediate pause or the volatility is making it difficult for the traders. So that is likely to continue in the coming week as well, both for the indices and for the stocks. Means failed breakout and underperformance of the broader indices, mid cap, small cap, that might continue. But on the index front, at least we have positive trend still in place. 22,150. That's the first area to look at. Below that, the tone is likely to change from positive to sideways, and below 21,900, it might turn negative. Upside 22,800, 23,100 is something that Nifty has potential to test. Banking is the ray of hope, which might help the index to maintain the positive tone. Upside, we have potential toward 49, 200, 300 levels. Downside seems capped because we have multiple supports at 47, 200. So that's the first area of support. Stock specific front, we talked about ICICI Pru, we talked about Chambal Fertilizer, which look positive to us, and Delta Corp, which can be a candidate for the short trade. So this is all from the presentation part. So let's do a quick feedback poll and then we can start with the questions. So please fill in your feedbacks and then you can start posting your question using that Q&A tab. Please quickly fill your feedback so that we can start with the Q&A. Okay, you can start posting your question if you're done with the feedback. And I'll request again that please restrict your queries to the sectors that you would wish to discuss, or it could be international markets also, how we are seeing things in the US markets, and means largely the broader picture, not individual stocks. Okay. All right, let's start now with a list of questions. Okay, first we have Mr. AR that view on IT sector. Should we invest new money in IT? Any view on specialty chemical sector? So yes, see IT as we were discussing at the beginning of the presentation that last week itself the Nasdaq Composite, which is the tech heavy index in the US, it made a new record high after almost 2.5 years. But at the same time, our IT stocks are reeling under pressure. So usually we trade largely in tandem with that trend. It's not that it's just a perfect correlation, but largely yes. So in the final sessions, we saw recovery in the IT majors. So I feel for a time being now, we should restrict our focus on the IT majors and avoid aggressive mid-cap IT names for a time being. So yes, you can invest your new money into IT stocks, but focus largely on the IT majors. Specialty chemicals and chemicals is a sector. In fact, now we are seeing finally, clear sign of recovery. So earlier, if you go back and see our earlier webinars, we were outrightly saying no to making any fresh investment into chemicals until we see some sign of reversal. So now we are certainly seeing sign of reversals, and some of these stocks are already have started seeing traction. So selectively, yes, you can start accumulating few names from that space, but don't be too aggressive. See, the reason of moving Tata Chemicals was different, so it's nothing to do with the chemical space. So before we decide on something, uh, we should know that why we are putting our money. Is it short term or long term? So from the long term perspective, definitely yes, we can start looking at chemical space to accumulate. All right, so we have answered the queries. Again, stock specific queries that I've just requested. Another query on IT, Mr. Benjamin. So I hope my answer cleared your doubts. Okay, chemical sector again from Rakesh. And apart from chemicals, chemical anyways we have answered. Pharma, yes. Pharma is now, I feel, is likely to trade mixed. And earlier it was a clear uptrend, but now we are seeing selective performance. So be very choosy when it comes to fresh buying in pharma space, and look for these stocks which are trading largely in sync with the index. Means uh, I'm not saying outperformance, but largely in sync with the index. So some of these stocks which are consistently underperforming, uh, wherein we are not seeing any sign, and at the same time we have certain stocks like Glenmark, Oro Pharma, Sun Pharma, they are consistently maintaining the positive tone. So the momentum is missing, but the tone is positive. So that's the main focus area. So one should align the trades accordingly. Okay, can I invest in Bank Nifty? Invest. So, Mr. Damodar, we don't invest into banking until unless you are buying Bank Nifty Bs. Bank Nifty Bs is basically the ETF which tracks the Bank Nifty performance. So if you want to invest, then that's the way. If you want to trade, means in future and options, then we've shared the levels, and if it suits you, uh, around the support area, you should look for buying positions, and around the resistance, you should book profits. Okay. IT sector, another query, Mr. Ritik, we have already answered. Okay, beverage stocks, Mr. Bhupendra Sharma have asked. So largely they are doing okay, but I feel that earlier we were seeing very broad-based movement in the beverage space, but now it's restricted. So I feel that the top name, United Spirit, should be on your list if somebody is looking for any uh, fresh investments at current levels. Okay, yes. Next query from Mr. Dilip Gujar on mid cap. Will it do better? No. Indications are not in the favor. So indications are in the favor that mid cap and small cap might underperform, might continue to underperform. Selective mid cap, yes. Large mid cap names, because they are the part of the FNO basket also. They are part of Nifty 200 also. Selectively, yes, some of these mid cap stock will continue to do well, but the broader basket, I feel the underperformance might continue, and especially in the small cap, more than mid cap, small cap, I feel they might underperform and maybe witness fresh decline also. So use this recovery in case if you see further recovery in in a mid cap and small cap space, and if you have bought some name on somebody's suggestion without any stop losses and targets, then it's time that you should rethink about your strategy and liquidate those positions. Okay. Okay. So though it's not part of this gold ETFs, Mr. Ibrahim have asked about gold ETFs, and there was another query on USD INR. So, see, currencies and commodities in a part of this webinar, but that's why we keep on asking you that whether you would like to hear about the alternative asset class also, because we talk about everything, be it commodities. We have specialists for the currencies as well. So, but yes, for the additional thing, or for the benefit of the larger audience, gold has started witnessing recovery now after a phase of decline. So, if you are investing for the long term, then definitely still we have more room to go from the current levels. But if you talk about gold from the investment perspective, it's not going to beat the equity as an asset class. So it's a hedge instrument, not a instrument to look purely for the return perspective, because the CAGR is roughly in the range of 8 to 9% year on year. So from the investment perspective, from hedging perspective, definitely you can add. Okay, next. Mr. Damodaran again on auto ancillary and hotel. So auto ancillary space, in fact, they did pretty well of late. And some of these names, they are still doing very well. But since they fall into mid cap and small cap categories, majority of the name, I feel it's time now to be selective, and the quantum of the position should be in sync with that. So if, let's say, you have 10,000 stocks in one particular counter during the recent bull phase, now I feel that considering the kind of volatility and false breakout that we are seeing across the board, and already the kind of return that we have seen in these stocks, one can at least reduce 50% of this trade. And if you're planning any fresh trade, then out of 100, just invest your 50 at current levels. And because the kind of deterioration that we are seeing in the mid cap and small cap index, it might result in much better levels to invest in weeks to come. And for the hotel industry also, selectively, yes, means Indian hotel, again, it's inching higher, holding strong. Rest of the names, we are seeing a bit of a pause consolidation, which is healthy. So Taj GVK, Lemon Tree, Chalet. For a time being, I feel that one can avoid any fresh position. But in case if we further get any dip, Lemon Tree and Taj GVK definitely holds much higher potential from the current levels. Okay, yeah. So basically, I'm not saying that it's an outrightly sell mid cap and small cap. What I'm suggesting here is that we are seeing distribution in the index on the charts. So I may be wrong. I'm not saying that market are going to tank or the entire mid cap and small cap stocks are likely to shrink, but charts are telling me that it's time to reduce position. So if it's not that it's saying for the first time, but in the last 1 month, indications have strengthened. Means the clues that we were getting from the price action, that has strengthened that we are not seeing any sign of strong up move from the current levels. So they are likely to underperform at least in the near future. So that might be that they'll continue to hover in a range or witness some decline. The decline could be limited, it could be severe also. So that's why I'm saying that underperformance, due to underperformance, we are suggesting to reduce. And usually when the market corrects, no, the mid cap and small cap, they witness sharp declines, sharp cuts also in selective names. That's also the reason that why we are recommending that one can look at reducing the position. So it's completely up to you. If you are okay with higher risk, higher return, and your time horizon is different, means you are looking for the long term, then you can continue to hold your longs. All right. Rest of the queries are stock specific. Mostly yes. So another query on auto sector. So yes, auto as a pack still, we are seeing no sign of slowdown because some or the other, uh, they are doing pretty well. It means Bajaj Auto, 10% kind of gains. Yes, there's a buzz due to the buyback also. But otherwise, also the auto counters like Tata Motors, Bajaj Auto, Maruti, they have all done pretty well. TVS. Uh, Now it's time that one should, be selective in this space also. And while you're chasing momentum, you should have strict trailing stop losses in place. So fresh buying, I would rather wait and see if there is any pause or consolidation. But for the existing position, trailing stop loss, as long as the momentum is intact, can help you be in the trade. Okay. So yeah, with this, we have answered all the queries, barring a couple of names which were stock-specific queries in nature. So please excuse. And if you are associated with us, with Religare, you can send your queries through the branch and we'll surely answer those queries. So yeah, with this, we can end this presentation here. Thank you everyone for participating. Next week, same time, we'll connect again. Thank you.